So as I have said in the last trading session that whatever bounce back we have seen as far as the price action of Wednesday is concerned, it's a dead cat bounce. And what we have seen on a Thursday trading session, that the overall market, if you're talking about Dow Jones, S&P or Nasdaq, has fallen and fallen like a pack of cards, although there is a sharp recovery that we have seen from the lower end of the range. But anyways, on close to close basis, it is definitely negative, where the minimum losses that we have seen is 1% in Dow Jones and maximum is in Nasdaq of 2.18%. So with this backdrop, let us see what is happening as far as indices is concerned, and then we are going to talk about the rest of the things. So as you can see, the bounce back that has happened. So this is the chart of Dow Jones, and I have been very clear about the trend. Maybe there are some confusions as far as Nasdaq or Dow Jones is concerned, but when you are looking at the price chart of SPX S&P 500, it is giving you much clear indication about the trend or the range, and it is indicating that we have some more to go on the downside. So right now, if you're looking at Dow Jones as usual, it looks like a range bound trend, and we have seen in the past the price movement of Dow Jones is quite restrictive. Okay, it will not fall like Nasdaq. It will not fall like Nasdaq. It will fall, then go up, then fall, then go up. Those kind of patterns are much more visible as far as Dow Jones is concerned. So as far as Dow Jones, we have 32,667, we have 32,583 and 32,488. These are going to be your support and the stop loss on the downside. And on the upside, you have your resistance in between 33,358 and 33,456. And if it falls below 32, if Dow Jones falls below 32,488, then the next support that we're going to look at will be 31,727.30. So this is what we are going to look at as far as Dow Jones is concerned. So even with a huge volatility, the price chart of Dow Jones is still range bound. So maybe it's a positive thing, but that does not make any sense, because that positivity is not going to save the market. As far as Nasdaq is concerned, Nasdaq is just holding its level by its teeth. So this is a very lame support, I would say, looking at the market condition. Maybe there is a recovery, but the chances are dim. Okay, so I mean the pressure is on the downside. But anyways, because Nasdaq is trading within the range is intact, so we have to respect it. And as far as the levels are concerned, we have 10,263 and we have 10,113 as far as the lower end of the range, and on the upper end of the range we have 11,200 and we have 11,543. So because of the high volatile nature or high beta nature of Nasdaq, you can see a range of nearly 1500 points from downside to upside and upside to downside, but try not to go below 10,100, otherwise your downside will start again. And let me tell you one thing very specifically, that if you are looking at the big swing or big price action, this is the daily chart for Nasdaq, and Nasdaq is given you a very clear indication there is a trend, or there are some specific levels which you need to know about. So if I may draw two lines like this, Nasdaq is giving you clear indication that the overall price action or the Nasdaq is in a corrective mode. Maybe it will go higher, but even if it will go higher towards 11,540, 550, there is still a chance that it will move towards or in between 7,200 or 8,000, 7,300 or 8,000, where it finally gets its support back. Okay, so this is what we are going to look at as far as Nasdaq is concerned. So right now it is range bound, but even in the overall context, the overall range is on the downside, or the trend is on the downside. Now talking about S&P 500, as I told you, I'll tell you the same thing again. The S&P 500 has already given you a clear indication that this is holding to a very the overall trend or the range is on the downside. So what we can do here, consider your immediate support of 3767 or 3760, let's say, below which we will move towards 3500, and as far as the big overall range is concerned, it will make its base somewhere in between 2800 and 3000 on the downside. So this is what we have here as far as S&P is concerned. And because today is the last trading day of this week, and we are in a holiday season, and this weekend is going to be a 3 days week off, so do not take additional or extraordinary positions, because next week will be a holiday week. You will see extremely less volume, and don't try to do something when volumes are less, because any volatility may because the trend is on the downside, so the downfall will happen with a very less volume. In that case, the severity of the move will be huge. Okay, if it moves higher, it will go higher by any means, and similarly on the downside, it will fall big, whether that contains any substance or not, because if volume will not be there, then obviously the trend may not sustain. Okay, even on the downside, so it will be a big bounce back afterwards, but that's a second case scenario. The scenario right now is the overall trend is on the downside, and most of the position chances are will get wind up because of weekend and holiday season. So nobody is going to carry their positions, if even institutions or individuals, because everybody wants to enjoy their holiday. Nobody wants to put their mind in front of their screen. So don't take positions just before the weekend, and when the holiday seasons are going to get started. So this is the end of the video. Thanks for watching.